Here on the Transparent FX Academy, every day I give you my best market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the Forex market. So without further ado, let's jump straight to the charts and see which is today's Forex pair. In today's video, I want to speak about CADCHF. Now, why do I want to speak about CADCHF? Because at the moment, we do have quite interesting price action and structure for a potential opportunity. So as usual, I will be performing a complete top-down analysis, starting from the higher time frames from a technical perspective, and then we will go down to the lower time frames and also check what we have on the order flow side. In fact, we will be checking here the commitment of traders, so COT data, which is basically what the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, by using a combination of these two different types of analysis, we will be able to understand where we have the highest probabilities for a potential trading opportunity on the pair. Now, starting here from the monthly time frame, what do we have? Now, here in the monthly, we can see that at the moment we're testing extremely strong supply. In fact, from here, all this move to the downside was created, and at the moment we're testing exactly the same supply and resistance, from which there is a good probability to see the market provide a rejection to the downside. So on the monthly, everything seems quite bearish, and we can expect the market to provide a rejection to the downside. Now, in general, after an impulse, if you want to measure the correction, you anyway have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has actually already retraced to the 0.382. But the candle that actually created this retracement is this candle here, which is a candle with a red body and a very long wick. And as you probably already know, if you have been following me, if you usually have a candle with a very long wick and a red body, there's a good probability that the following candles will actually fill in the wick. This is a pattern which the market loves to complete over and over again, meaning that we can expect the market to provide a deeper correction, possibly for another test of the 0.382 before the market can then start the continuation to the upside. So on the monthly, everything is quite clear. We can expect the market to provide a little more continuation to the downside before then the next impulse can start. Going down on the weekly time frame, what do we have? Now here in the weekly, however, we can see that all this zone here is extremely strong demand and support. In fact, from here, all this move to the upside was created. The market then broke below the support and broke back above, meaning that this previous support, which the market created a fake breakout of with this move to the downside, is now again support here. And we can expect the market to provide a rejection to the upside. So even though on the monthly, we do expect a little bit more move to the downside before the continuation, here in the weekly, everything is quite clear. We have confluence of support and demand at this area, meaning that we can expect a deep test of this zone before then seeing a rejection to the upside. Since we are now on the weekly, we can also take a new Fibonacci, which is basically the Fibonacci on the weekly impulse. And in this case, the weekly impulse is from this low to this high. And what we can see here is that the market has actually retraced all the way down to the 50%. Therefore, the market actually did provide a quite deep correction, meaning that continuation to the upside is very possible from this level. Just a quick thing, make sure that you leave a like and subscribe to the channel, and also let me know in the comments the topic for the next video that you will like. Going down on the daily time frame, what do we see? Now, here on the daily, the price action that the market has is quite interesting. We can see at the moment how we already know that this area is demand, but the market is currently about to test this zone, this demand and support zone with an M pattern. Now, in general, after the market creates an M pattern, you expect the market to provide a move to the upside to complete the pattern itself at the previous support turned resistance, meaning that if the market here on the daily time frame will actually create this M pattern, we can then expect the market to provide a move to the upside to complete the pattern at the previous support turned resistance. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are doing in the market, what we can see is that lately net positions have been increasing. In fact, we went from having 2.4k net positions all the way up to having 48.7k net positions with 5.2k longs added with the last report. So the CAD is getting quite strong with 89k longs and only 40k shorts. And if we go and see what we have on the CHF, we can see how the CHF has been getting weaker with the net positions going from 14k all the way down to 300. So we basically have strong CAD and weak CHF, meaning that obviously if you have strong CAD and weak CHF, the market can easily provide a move to the upside. Meaning that if the market here will actually provide this M pattern testing strong monthly and weekly support, we can easily expect the market to provide a move to the upside. So we have a short-term longing opportunity here on CAD CHF if the market will actually provide this M pattern. So how we will be approaching this potential longing opportunity with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, we will be monitoring price action from a 4-hour perspective and lower during this move to the downside, and we will be waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point we will be adding CADCHF to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete the pattern at this previous support, turn resistance here from a daily perspective. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. Every day you get the new daily market breakdown showing you how to apply the strategies with the entry stops and take profits. And you can also ask questions and get the answer the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.